my next guest, our resident expert here among the NYSE community, is going to tell us more about it. Joining me now in studio is Jay Woods. He's a chief global strategist at Freedom Capital Markets. Jay, always good to see you, especially with some good news.
Yeah, who knew? 9-day winning streak, the longest since '04. If we go 10, which it's not looking like we will right now, but it's early. It's early. That would be the longest since 1995. So remarkable turn of events in what was an extremely volatile month of April.
It was an extremely volatile month, and in fact, we've recouped those losses since the April 2nd tougher than expected tariffs that we heard from President Donald Trump. Where do we go from here?
That's the million-dollar question. I think we rest a little bit right now. It's been one heck of a ride. If you went away for the month of April, came back, you'd be like, oh, nothing's changed. But those of us living through it day to day know it was one of the most volatile months ever. And I think a little bit of a break is in order. So we've got a few things we have to watch closely. We've had some good earnings. That's been great. Guidance, murky. So we're not going down on earnings. We're not really escalating to new levels. So I think we're going to take some time, chop sideways for a little bit. But as people want to know, are the lows in? I think they may be, because we got the worst case scenario on the tariff front. Now, no deals have been struck yet, but we're hearing progress is being made. We know what the worst case scenario is. So if we get a few deals out there, that could bode well for some certainty, which we've been lacking. And maybe, just maybe, next quarter we'll get some good guidance, we'll get some solid earnings, and we can talk about finishing this year strong. But right now, I think we still have some sideways action to go before making that next leg to new highs.
And we know, right? I mean, you certainly know, you've been doing this for decades, that the market craves certainty. And one of the reasons we had seen such a dramatic pop after the election is because we actually got, in that particular moment, certainty on the path forward. So what does this strategic uncertainty, as Treasury Secretary Scott Bessent has called it, mean for that potential range-bound or volatile trade?
Yeah, well, we're going to be watching one person in particular this week, and it's not the president, it's Jerome Powell. When the Fed meets on Wednesday, it's going to be fascinating not to see what the decision is. No one expects them to cut rates, although the debate is they possibly could, because the data, inflationary data, has been stable, sticky, if you will, so they could possibly cut by a quarter. But I think the integrity of the Fed is at stake, so I want to hear his commentary and what they're going to do at this June meeting. Will it be dovish because the data has given them the ability to cut without really causing a tizzy, or is he going to focus on tariffs again and be a wet blanket and say, well, with this uncertainty, we still don't know what's going to happen, and that would probably cause the ire in Washington and lead to some potential volatility here at the market. So Wednesday, the decision, but that press conference is going to be fascinating to watch for traders.
Yeah, he does seem to take a step-by-step approach, the Fed chair, and some have even criticized him for being behind the curve in particular instances, but he's got his hands full, certainly navigating this environment. We do have a live look of Berkshire Hathaway's trading post. It's such a legendary stock, right, that's been listed here on the New York Stock Exchange for a very long time, of course, over the weekend, even though we knew this plan, succession plan, was in the works. Warren Buffett, at 94 years old, announcing that he is ready to step down as CEO. What does this mean? What is the history of this investor, and how has this stock been such a staple here at the exchange?
Here since 1994. I remember when he was on the floor and just how iconic it was to see him here at the New York Stock Exchange. The low was $18,200. It's now trading at over $800,000 a share. Not a bad return on your investment. We knew this day was going to come. He's 94 years old, but the succession plan was in place. The stock is down only 3%. If you told me years ago, well, Warren Buffett's going to retire, resign, move away, then we think it'd be a pretty bad day here. But the succession plan with Greg Abel, who's 62, coming into play, caught people off guard, including Mr. Abel. But this was the plan all along. So it's a sad day, but he's still going to be involved in the day-to-day. He's not going anywhere. He's the chairman. But as far as iconic investors, if there was a Mount Rushmore of investors, he'd be the first one on that mountain. So,
and a stock that impressively has outperformed right near a record high, despite all the volatility that we've seen this year.
Yeah, and the market cap is one of the top 10. In fact, it's number 7 coming into today, behind only 6 of those magnificent stocks. So for a company that is not considered a technology company, for it to continue to slowly and steadily climb, It's been great for investors. Ironically, he doesn't pay a dividend. I don't understand the smartest investor in the world not doing that. But hey, you can't critique anything he's done along the way. And getting to see him once here at the NYSE was unbelievable. So he will be missed, but he's not going anywhere as of now.
All right, you mentioned we are set for about just a 0.7% pullback here. That's actually how the stock market is trading now when we look at the S&P 500. But again, I think what many would consider probably a normal pause amid the strong run that we've seen over the past 10 days or so. The president, of course, overnight announcing that he does want to put 100% tariffs on movies made outside of Hollywood. Is that something that Wall Street feels the impact of?
No, I mean, I haven't looked at what Netflix is doing this morning, but no, just another crazy tweet that we'll deal with. But it's not going to have an overall impact. It's not why we're selling off today. This market has made a tremendous move. Not quite overbought yet, but this is a normal pullback, and I think it's going to be quiet until we get that Fed decision on Wednesday. So people hopefully can take a deep breath and digest these gains and see what Jerome Powell says on Wednesday.
Anything that you're seeing, Jay, in terms of positioning, in terms of the Mag 7 was once so loved, it underperformed this year. How has this volatility changed the game, if it has, when it comes to sector rotation? Yeah,
well, we're going back to those technology and consumer discretionary stocks that have led us in strong bull markets. They were the two biggest lagging sectors all year long. They finally made it back to the middle of the pack, not necessarily leading, but this is the leadership you want to see. So it's a good first step in a recovery. Now the question is, can they maintain these gains, hold on to these levels? I think it will still take some time for these Mag 7 stocks to lead us higher, but progress is being made every day. Let's see where the tariffs go and what kind of certainty we get, and that will probably be the next catalyst to get us back to talking about, hey, we're at 6,000 in the S&P 500. We're talking new highs, but it's crawl, walk, run. We've crawled back to nice depths. We're walking at a good pace. Let's see if we can get back above the election day high, which is 57.86. Don't hold me to that. And the 200-day moving average, which is 57.45. So we're at nice levels, but still work to be done before we give the all clear that we're back on the right track.
All right, Jay Woods, Chief Global Strategist at Freedom Capital Markets, joining us here in the studio. Jay, thank you as always.
Thank you.